Good afternoon, this is Stuart Slocka with Chicago Stock Trading here at the studios of Mr. Topstep. And today I just wanted to bring to you the attention just the quick similarities of what we're seeing the second half of the year from the first half of the year. So the second half of the year began in July through December, and as we noticed, the same exact action has taken place from the first half when we had January start off with a sideways, two-week sideways consolidation range that was followed by a downward liquidation down to 1732, where we broke the 6-month vol window at 1797 to establish a bearish 6-month bias. This was the first time in 2 years that a bearish bias was established on a 6-month basis. And what took place was we saw that V-shaped bottom off 1732. We reversed, we climbed above 1847 to recover the point of break, and the market held above to reverse that bearish bias. Now, into the close of the first half of the year, we saw shorts that were left over having to capitulate into that close and forcing to cover. And that's why we saw the range of 1847 on 1732 expanded up to 1955. Second half of the year started in July, and we saw the same exact thing. If you look at the daily chart, 2 weeks of sideways range, except this was followed by a new record high that was rejected to take out the July lows as a reversal, and we broke below the 6-month vol window at 1832 again to establish a 6-month bearish bias. 2 times in a row in the same year. So now if we look at what we're seeing, the same exact thing, we're seeing another attempt to V-shape bottom, and this time we're seeing the market come back up to retest where the market fell up at 1860. So 1860 levels, or 1960, excuse me, is going to be a major area of resistance for the sell side to defend and also for buyers to have to work through. The reversal window on the 6-month basis comes in at 1977. So the market will need to close above 1977 for 4 days to reverse its 6-month bearish bias. If it can find itself to hold above 1877, then it'll reverse this 6-month bearish bias, and that'll give fuel to continue to push this higher. Until then, rallies up to this 1860 level give the bears an area to defend the 6-month bearish bias and look for a retest of the recent lows. Until next time, this is Stuart Slocka, and wish you guys a good day.